what do you see as the biggest problem or challenge in the industry today, and how do you think that brokers can meet this challenge?
All right, well, I've sort of earmarked 3 or 4 challenges here, but naturally the first one for me is the property market. The property market is in, I guess, the bottom of the cycle, as we can say, and we've seen housing prices being reduced in southern states and to a lesser extent that in Brisbane. We're seeing a bit of oversupply as a lot of these development projects and around units are now coming to completion. And as a result, we're seeing investors standing off, they're just biding time. We're also seeing property upgraders that are perhaps waiting for prices to dip a bit further, but also they're being constrained a little bit by the credit squeeze because they're not probably being able to borrow the money that they might have been some time ago to upgrade. So we're in this holding pattern at the moment. We're at the bottom of that cycle. So the expectation is we can only go forward from here. Yeah. Most of the experts are predicting that will be in that 2021 period ahead. But traditionally when the property market, the purchase market slows, the refi market for us grows. Yeah. But one of the challenges this time is that I guess the ability to borrow and the credit squeeze is making it harder for people traditionally refi. But having said that, there's some great products out there, but there's also some important niches. So we're seeing first home owners, that market has been going pretty strongly for the last 12 months, and we expect that would continue going forward. Given that there's some great pricing out there for these people. We also see those renters, perhaps now a great time for them to get into the market space as well. So I guess targeting a couple of niches, still sticking around that refi, but making sure that I guess you're educating the people in terms of what they need to be in a better product, and focusing on those couple of niches. The other big impact is the events around the Royal Commission and the regulation, I guess, overview of the industry. And this point around best interest duty now. What we've seen is the credit reduce somewhat, so we're seeing the supply being tightened by the lenders as they, I guess, try and meet the regulators' requirements around the amount of investment lending growth, the amount of interest-only lending that they do, and the like. So, and we're seeing as a result of that a lot more work required to get the same piece of business done. So before the Royal Commission, 30% of applications to lenders would come back asking for more information. Since the Royal Commission, that figure is now pushed out to some 70%. So wow. We're looking at a lot more work to get the same business done. And in a lot of instances, we can't get business done that we used to get done simply because of that credit tightening and supply. It's taking up to 5 days for a good broker now to get the information together to submit a good application, and we're probably looking at up to 10 or 12 days to get that application to approval. And hopefully, you've got a 30% chance of getting it to flow in first go. There's a lot of instances it's going to come back and delay time as they ask for more and more information.
So having the ability to prepare applications to be perfect before they go in might save a little bit of time?
Well, I guess diving a little bit deeper into the client's personal circumstances, getting probably more information than you would think you would need, so that you can give a really comprehensive submission to lenders and tick every box that you can possibly think. So I guess the best way to look at it is look at the worst case scenario and provide everything that you would need in a worst case scenario, or have that information available so that if you do get asked for more information, it's readily available. So it's a great opportunity, I think, to review your process. So it takes some time to Kaizen the back end of your business. Look to embrace automation. There's some great tools available, there's great applications that will assist you in that application process. And also look to automate where possible, and look to outsource as well. So there are some people that are providing some great outsourcing opportunities for you to look after those areas that perhaps you're not as good at, and that is taking a lot of your time. So those considerations, I think, in that space. Yeah,
you want the automation of tasks to not be any of the tasks that are your client touch points, So definitely take advantage of all of the software and other things that can speed up that back end process for you, but always be able to give that additional time to your client in an environment like this.
Yeah, obviously we've got some unintended consequences as a result of this layer of regulation. So the financial planning industry went through the FOFA, where they've now got this complex documentation, and the consequence of that is it's taking a lot more time to prepare, and the cost to prepare that is having to be absorbed by the business. Is the benefit to the consumer any greater as a result of that? Well, that's one of those consequences. So it's something that you really need to review how you're going about this, because at the end of the day you need to be in the business to be profitable. If it is using up your time and resource, then you need to look at other ways. The other concern, of course, is broker commissions and the changes to broker commissions. So with the recommendation that trail disappears and the opposition party pushing that barrow at the moment, there is a lot of uncertainty in and around the income attached to this style of business in 6-12 months' time. We have no idea where that's leading in any shape or form, but traditionally a broker has relied on trail to, I guess, offset some of the costs of businesses, so some of his rents, some of his overheads. He's relied on the trailing income. So if that disappears, then obviously it'll put pressure on the business in terms of those ongoing costs and even the cost of staff and staffing in your business. So that uncertainty is sort of creating, once again, this unintended consequence. We're in business to be profitable here, but will it be profitable in this new regime? So I guess the obvious thing to do is to look at other income streams. So look at car lending, look at small business lending, look at referring insurances, look at other income stream that you can obviously refer or suggest to your clients.
So diversify your offering just a little bit,
very much so. So you should be doing that now. The other one, of course, is you might consider a fee for service. So there are different ways of using a fee for service, and of course the financial planning business have embraced this. So have a look at other business, have a look at what they're doing and see if there's an opportunity for you to incorporate that in your business. But I guess you need to work out how much money you need to make this a successful business from your perspective, and just where that money or that income is going to come from in the under a new world.
Maybe even kind of changing some of the processes or internal flow of work to be able to handle if trail commission does disappear.
Yeah, very much so. You should be thinking of that stuff now and looking at ways and means that you might be able to accommodate that. As I said, we're living in an uncertain time. We don't know when we'll get certainty. It could be 6 months, could be 12 months, it could be 2 years, we're not quite sure. But it's best to be considering those things now, and there's nothing that's going to hurt you to implement a lot of those things sooner rather than later.
Because if you can have your business kind of handling the worst case scenario now, that's just going to set you up for if it actually happens.
Yeah, and I guess the other challenge for us as an industry is just the political and economic landscape that we're currently in. We're in election month, or next month we are at least. The policy for the opposition is sort of fairly rigid around reducing the benefit of negative gearing, and of course capital gains tax. Now that's going to have a significant impact on future investors. That should also see home prices fall perhaps, and of course rents will increase. So the dynamic will change a lot. Brokers need to be on the front foot, so they should be looking at, I guess, how we can introduce more renters to become first home buyers, how we can target some marketing towards that particular sector, and that's probably 30% of the 34% of the market in Queensland. So it's a big market space. Also, they need to be looking at ways to educate investors, because you'll have some or the concession won't change if you're investing into new property. So there's some education and the likes that they could be conducting now and around the opportunities for investors in the new world.
Okay.